Hey guys, Daniel here and welcome back to another video. Here today, I want to focus in on and update you guys on, in my opinion, one of the best growth opportunities in the stock market at this moment in time. The name of that company is the Tattooed Chef, ticker symbol TTCF, a company revolutionizing the plant-based food industry. In this video, I want to focus on a few main things. One, I want to go through this company's latest kind of news announcement pertaining to new product launches. They just announced 5 new products, and I want to go through each of these in this video. Next, we're going to go through my long-term price targets, exactly where I think the Tattooed Chef will be at 5 years down the road based on my revenue, profit, and valuation projections. Next, we're going to go through what would need to happen with this company in order for me to lose money. So that's, essentially assuming like a decrease in revenue growth, decline in profitability, and a decrease in valuation. And then lastly, we're going to go through what I'm doing. If I'm buying, selling, what this company makes up as a percentage of my portfolio, and things along those lines. So if you enjoy these Tattooed Chef videos, make sure to hit that like button, guys. It really helps me gauge the demand for these videos versus other videos. And yeah, let's get into it. When we look at this latest announcement, guys, Tattooed Chef expands pizza offering with the launch of new plant-based pizzas. So we have 5 new pizzas coming here from the Tattooed Chef. This is a smaller image, so I have a bigger one loaded up here. And the main thing that this gives us is certification of the innovation that's going on at the Tattooed Chef. When we look at like pretty much like their goal overall, they have 5 main product segments that they want to really expand in the short term. 1. Single serve bowls. 2. Smoothie bowls. 3. Vegetable blends. 4. Meat alternatives. And 5. Plant-powered pizzas. Now, when we look at their overall products, we'll see, that they had a couple pizzas back in 2020. I think there were 2 pizzas back in 2020. And we can see that in 2021, they're expecting to release 24 new products, which is, that's just absolutely phenomenal and really showcases the growth going on at the company. But needless to say, these 5 pizzas are 5 of those 24 products. And what's very interesting here, guys, is that they're starting to really implement this plant-based meat technology, with the plant-based pepperoni pizza, with the plant-based sausage and pepperoni pizza. They've released a few products like a burrito blend with, plant-based beef. They're really starting to take this plant-based meat more and more seriously and implementing it more into their products. And what's very interesting about this, when we look at like a Beyond Meat, in my opinion, they are, at the top when it comes to the quality of their plant-based meats. But the thing is, they're in a very different industry. They're in the type of industry where, you go, you get your plant-based, or you get your Beyond Meat burger, you take it, you gotta cook it, you gotta buy your bread, you gotta buy your toppings and whatnot, and you gotta make it yourself. The Tattooed Chef is different in the sense that you can make these meals, they're all pre-prepped, and you can make them within 5 to 10 minutes. So they're very, quick and easy to make. They're all healthy, and it's great that they're finding this niche in the plant-based meat market within the already, in my opinion, giant niche. The freezer food aisle is literally a $60 billion industry in the United States alone. So seeing them expand into these plant-based meats just opens up an even bigger opportunity, and I really think it falls right in line with this brand's goal of being plant-based. Now, next thing I want to go through here is my price targets, revenue projections, etc. for the Tattooed Chef. But before we look at my price targets, we need to get a look at exactly what the company's expectations are when it comes to revenue growth, gross margins, and adjusted EBITDA. We'll see. Now, we have projections from the company going from 2021 to 2026, and we'll see the growth that they're expecting to essentially experience in those years. Obviously, a very quick growing company. We'll see that as revenue expands, they expect gross margins to increase. I am in line with this. I think gross margins will increase as they scale the business, as their products, they essentially create more products, the cost of those products decrease, and, essentially moving away from private label. The Tattooed Chef has 2 sides of their business. One, creating essentially food for like the Kirklands of the world. That's like Costco's subsidiary brand. brand. And the margins with those products are very, very slim. So as they transition away from that, their total gross margins will increase substantially because, the Tattooed Chef products are much more profitable than these private branded products or private label products that they're making for, like, the subsidiary brand of, for example, Sam's Club or Costco, etc. So as they shift away from that private label, gross margins will increase naturally, and you also have that tailwind of essentially, the more you make of something, the cheaper it gets. And as these gross margins increase, they expect adjusted EBITDA to increase as well to overall above 20% of total sales by 2026. Now, when we look at these revenue forecasts, I think they're being a little bit conservative. When I run my numbers, I get the Tattooed Chef being at $1 billion in revenue by 2025. I really think they're underappreciating the potential of international expansion here. When we look at the United States, I think they will be able to fully expand into grocery stores, into superstores, etc. But I really think that it's international expansion that will really drive growth in the back half of 2024, 2025. And I think that's being underappreciated here. So when I run my numbers, I have them at $1 billion in revenue by 2025, and you also have to consider that, as a newly public company, there's a big chance that they actually sandbag these expectations a little, not to get too ahead of themselves. So again, it would not surprise me to be at $1 billion in revenue with 35% margins by around 2025. But worst case scenario, we just gotta wait, 6 to 12 months. So when we look at my price targets here with the Tattooed Chef, I am using my more bullish numbers, right? So we have $250 million in revenue by 2021, so that's this year. I think they're being a little too conservative with their estimates this year, given what I'm seeing with product sell-through. And again, we're getting to that $1 billion range by 2025. And then when we look at revenue growth, obviously we need 41.5% revenue growth year in and year out from 2021 to 2025 to get that $1 billion in revenue. But you got to keep in mind that it's not like these are my estimates exactly for these years. It's just a general sense of what Tattooed Chef would need to grow on average to get to that $1 billion in revenue. Now, gross margins I have sitting at 35%. This is in line with the company's expectations. They're thinking over 35%. I'm sitting at 30%. And when we look at operating expenses and taxes, I think 20% is very fair. And when we look at the company's expectations for adjusted EBITDA, they're thinking over 20% by 2025. So that's earnings before interest, taxes, depreciations, and amortizations. So when we look at taxes, 5% of total revenue, I think that's pretty fair. And obviously these numbers aren't set in stone. So we might get a situation where, taxes might increase a little, but profitability at the company might increase to cancel that out. So net income margin, that leaves us with right around 15%. I think that's fair, and it makes sense that by that time 15% is pretty realistic for the company, in my opinion. Now when we look at a price to earnings ratio, I'm using a 40. The industry generally tends to trade at a 15 to 20 price to earnings ratio, but most of those companies are actually pretty stagnant when it comes to their revenue. So given that the Tattooed Chef is a brand that's really in this newly emerging plant-based meat market, and the fact that they're growing so significantly, I think they'll be able to trade at a bit of a premium compared to their competitors. So 40, in my opinion, makes sense. So multiplying that obviously by their net income, you get a market cap of right around $6 billion by 2025. And when you translate that to a share price, that's right around $74 per share, or a price upside of over 300%, a 4x. So that is why the opportunity, in my opinion, is so massive with the Tattooed Chef. And when we look at their shares outstanding, for example, this is a company that's operating at break even to profitability at this moment in time. So they're not really going to need to raise more shares, as they already have over $200 million sitting in the bank. And that will be able to sustain the potential expenses related to growth. But you need to keep in mind that they're cash flow positive. So, any expenses related to running the business are covered by the business itself. So next thing I want to look at here is, what would need to happen with the Tattooed Chef in order for me to lose money. I haven't done this before, but I really just want to take a little bit of a bearish look and see, what would need to happen to make this company trade under a $1.5 billion valuation 5 years down the road. Now, what I'm going to do here, I'm going to take revenue in 2021. I'm going to put this at $222 million. This is what the company currently expects. This is what they guided for this year. I have a strong belief that they're going to actually essentially do more revenue than this, but let's keep that at 222 million. When we look at revenue growth, analysts actually expect them to grow 30 to 35% up until 2025. So I'm going to be extra bearish and put 25% here. So keep in mind, that gives us a revenue of just around $540 million by 2025. The company expects to hit this by 2023. Next year, I'm going to expect essentially a big decrease in gross profit to 30%, but operating expenses and taxes staying at 20%. What does that mean? That means the net income margin goes from 15% to 10%, meaning for every essentially $100 in revenue, we're going from $15 in profit to $10 in profit, cut by a third. Keep in mind, we're still trading 50% higher, so now we got to look at this valuation here. What's it going to take for the Tattooed Chef to trade under today's price if the company only grows 25% per year, which in my opinion is just laughable, and if gross margins don't get to where they think they are, and expenses stay essentially where I think they'll be, even at 35% gross margins, let's assume a 30 price to earnings ratio, we're still trading above the current share price. Let's assume maybe a 28 price to earnings ratio. We're still right around break even, and the place that you'd lose money is if this thing only did $500 million in revenue by 2025 with a profit margin of 10% and a price to earnings ratio of 27, you would break even on your money. That is why the opportunity, in my opinion, is so massive with the Tattooed Chef. So many things have to go wrong with this company's growth, with this company's profitability, and with this company's valuation and investor sentiment towards it, that, even if all of those things happen, you break even on your money. So that's what's making this opportunity here so exciting. It's just so much revenue growth coming from this company. The profitability is going to get real in the back half of 2024 to 2025. And I really think this is one of the best plays in the food industry in general, and the fact that they're just plant-based just adds an extra layer on top of that. Now, next here, I want to take a look at what I'm doing with this company. Let's take a look at a chart here of the stock price. We'll see that this has been a company that's been pretty beat down since the beginning of 2021, going from around $26, $27 per share to now right around 18 bucks. Now, I'm currently right around break even with my shares, and if you had to, essentially ask me, would you buy or would you sell? I'd say for sure I'm buying this stock. It currently makes up right around 13 to 14% of my portfolio, and I'm fine having that weighting over the long run given this company's innovation. I really think this company is in just such a beautiful position to continue expanding in this rapidly emerging market. And if you own the Tattooed Chef, let me know in the comment section down below. I think this is a very exciting opportunity over the next 5 years, and I hope I managed to somewhat convey that in this video. So if you enjoy these Tattooed Chef videos, again, make sure to hit that like button. Thank you so much for watching, and have a great day.